Joining us now, Eric Jackson, founder of EMJ Capital. Eric, thanks so much for joining us. Great to have you on a week like this where tech stocks have sold off so aggressively. What in your eyes has been the trigger for the latest bout of selling?
Hey, Wolf, good to be with you. Well, I think you've highlighted these before. The Omicron concerns as well as the Fed, I think, were the culprits this week. And then in response to that, I think there's just a lot of institutional degrossing or kind of taking chips off the table, which definitely was occurring this morning. So we're not going to have resolution on either of those, the questions surrounding the new direction of the Fed or what's happening with the newest strain of the virus. So I think for a lot of people, the best advice in the short term is probably doing nothing, sitting on cash as a position, and kind of not leaning too far kind of one way or the other in terms of going long or going short.
So do you think, Eric, in the short term, we're more likely to see further weakness in the NASDAQ than any quick bounce?
I mean, the honest answer is I don't know, Wilf, but it really depends how the weekend goes, what kind of headlines we see about the latest developments with the new strain. We just don't know yet. We know that cases are about a third. New cases are about a third of what they were in South Africa at their peak for Delta in mid-July. But that really doesn't. We just don't know if it's going to explode or not. It doesn't seem to be exploding. But my own sense of the concerns about the new strain is we really underreacted to Delta. There were pictures of people lying in gurneys in India for weeks and weeks, and we really didn't respond to that. So it wouldn't surprise me if we're overreacting to this newest strain. But we're just going to have to wait and see. And with the Fed, it's actually a good thing. I think that Powell came out and sort of put to rest the idea that inflation was transitory. I think that should, in time, give the market some comfort. And certainly you've seen the 10-year backed up over these last few days, which is a good thing, especially for things like tech stocks. But, on day-to-day and where the headlines go, that's really going to determine the short term.
Eric, we have you on and we highlight your good calls and some of the not so good calls. So I did want to ask you about DD because that was one of your big picks from June on the news today that it's going to delist from the New York Stock Exchange.
Well, I said I liked the company, but I said I didn't own it and wouldn't own it when I was on the show. And you asked why, and I said there's just other better ideas out there that I'd rather spend my time on and didn't want to think about the kind of the regulatory concerns. So
I just remember you liked it.
I'm a fan of the management, but obviously they've just been taken out just with all the regulatory concerns around them. So but their case probably doesn't say a lot about the broader tech market and where things go from here. It's a particular case, obviously.
What about some of the other faster growing tech names that you've liked that have gotten dragged into the selling? An Upstart, an Opendoor, 23andMe had a good run after you came on and now is down from that point. Are you adding to positions here? Are you rethinking them?
I was adding some positions today amidst the sell-off after this morning. So I like I think there are a lot of names in the SaaS space that have been taken down, and obviously we've seen just in the last few days there's a big difference, in the SaaS universe between a DocuSign and then like a Snowflake or a Smartsheet last night. So for me, for example, I've owned Bill.com, and I was adding to it today. They had a phenomenal set of earnings a couple of weeks ago, but the stock is about 40% off of its post-earnings high for really nothing more than the fact that it has an expensive multiple, but it has one for a reason. It's growing phenomenally. Its net retention rate has been amazing. So definitely adding to certain names like that where they've just been taken down so much. I think it's prudent on days like today to add to those kinds of positions that I have long-term conviction in. Upstart was a name that I bought a little bit today as well.
Which was the name of that one? I actually didn't catch what you said. Just if you can repeat it for our audience.
The first one I mentioned was Bill.com. So they provide payment systems for small, medium businesses.